The date is the 12th of February 2026 and there is a call by certain unions for a Bharat bandh. But there is confusion among bank customers about whether banks are open or closed. The bandh has been called by leading bank bodies and central trade unions in protest against the government's newly announced labour reforms. The labour reforms came into effect on the 21st of November 2025 and there were widespread protests even at that time. Coming back to the present, banks like the State Bank of India, Bank of Baroda and UCO Bank have informed the Bombay Stock Exchange about the strike notification and possible disruptions in their services on the 12th of February 2026. Certain banks have informed the BSE through their respective filings that they have received a strike notice from bank unions. However, banks continue to remain open. The strike has been called by certain leading bank bodies such as the All India Bank Employees Association or AIBEA, All India Bank Officers Association AIBOA and Bank Employees Federation of India BEFI, along with 10 central trade unions. According to the bank body's joint letter to its units and employees, it reads, and I quote, "The labour codes proposed to be implemented are totally against the workers and stringent conditions have been prescribed to register trade unions," unquote. The question arises as to why are the unions protesting the labour reforms yet again? Bank associations have for long been fighting for a work-life balance and hence also demanding a 5-day work week. How much is this strike likely to affect customers and even organizations from carrying out basic day-to-day transactions? While many banking services have shifted to convenient online and mobile platforms, certain transactions still necessitate an in-person visit to the branch. This is primarily due to strict requirements around identity verification, regulation compliance, physical documentation, security concerns, or complex legal processes. So much for the likely disruptions. Let's look at the reforms themselves. The government may have been ushered towards the fast implementations of these reforms in order to fast-track manufacturing and ease of doing business in India, something India has been criticized over worldwide. The reforms implemented by the government have consolidated 29 labour laws into 4 comprehensive labour codes. The 4 labour codes include the Code of Wages 2019, the Industrial Relations Code 2020, the Code on Social Security 2020, and the Occupational Safety, Health and Working Conditions Code 2020. The historic reforms streamline compliance, modernize outdated provisions, and create a simplified, efficient framework that promotes ease of doing business while safeguarding workers' rights and their welfare. The logic of the government has always been that most labour legislations were framed during the pre-independence era, necessitating alignment with today's economic realities and technological advancements. This is what the government seemingly aims to achieve through these reforms. 1. Universal minimum wages. The code establishes a statutory right to minimum wages for all employees across both organized and unorganized sectors. Earlier, the Minimum Wages Act applied only to scheduled employees covering 30% of the workers only. 2. Introduction of floor wages. A statutory floor wage shall be set by the government based on minimum living standards with scope for regional variations. No state can fix minimum wages below this level, ensuring uniformity and adequacy nationwide. 3. Criteria for wage fixation. Governments will determine minimum wages considering workers' skill levels such as unskilled, skilled, semi-skilled and highly skilled, geographic areas and job conditions such as temperature, humidity or hazardous environments. 4. Gender equality in employment. Employers shall not discriminate on the basis of gender, including transgender identity, in recruitment, wages and employment conditions for similar work. 5. Universal coverage of wage payment. provisions ensuring timely payment and preventing unauthorized deductions will apply to all employees, irrespective of wage limits, currently applicable only to employees earning up to 24,000 rupees per month. 6. Overtime compensation. Employers must pay all employees overtime wages at least twice the normal rate for any work done beyond the regular working hours. 7. Responsibility for wage payment. Failure to make timely wage payments would make the proprietor or entity liable for unpaid wages. 8. Inspector cum facilitator. The traditional role of inspector is replaced with inspector cum facilitator, emphasizing guidance, awareness, and advisory roles alongside enforcement to improve compliance. 9. Compounding of offences. First-time non-imprisonable offences can be compounded by paying a penalty. Repeat offences within 5 years, however, cannot be compounded. And 10. Decriminalization of offences. The code replaces imprisonment of certain first-time offences with monetary fines up to 50% of the maximum fine, making the framework less punitive and more compliance-oriented. While all this sounds progressive and fair, unions argue that the consolidation of 29 labour laws into 4 codes is being used as a cover for deregulation. The codes will accelerate privatization and outsourcing across key public services by making it easier for employers to hire workers on short-term, low-paid contracts with weaker protections. The codes create strong incentives for governments and public sector employers to replace regular jobs with outsourced contract and PPP arrangements. According to the unions, this not only undermines stable employment and unionization, but also opens the door for private contractors to take over core functions in municipal services, health, education, and utilities, often with poorer conditions for workers and lower accountability to the public. In this sense, the labour codes are not just an attack on workers' rights, they are also a quiet tool for pushing privatization and eroding the public character of essential services. This according to the unions. Various unions across India have been protesting these reforms ever since they were implemented on the 21st of November 2025. The bandh call on the 12th of February 2026 is yet another resistance to labour reforms by yet another set of unions, this time from the banks.